Hi there, traders. This is Brad Gilbert with a trade alert on the Kiwi. Now, what we are seeing, I've seen a bit of an imbalance here between what the market is expecting as far as the interest rate decision goes and the Kiwi cash rate. The forecast is for 5.5, right? The same as it was prior. Now, the range is 5.25 to 5.5. There is room for a cut, but you know what? The market is expecting, or the majority of the market is expecting no change. But on the derivative side of things, if you look at the RBNZ in the interest rate probabilities here, it's almost a 78% chance of a cut of 0.25%, right? So that's what the underlying market is telling us, that a cut is on the cards, but the market looks like it doesn't expect it. So that sets us up for an opportunity, like a unique opportunity to sort of catch the market unawares of a potential rate cut. Now, it doesn't mean the market's wrong, but what we're trying to do is isolate opportunities where we can get into a trade. Now, this is the thing too, like the Kiwi on an hourly basis is starting to move topside, right? We had some weaker US numbers yesterday. We've got the US CPI numbers later today, like much later. So we've got plenty of time for a trade here. On the daily perspective, it's coming back up to a resistance trend line, but you know what, sort of within ranges, right? So there's nothing really alarming here. If anything, topping out at this level here does support a bit of a blip to the downside. And that's what I'm expecting if we do get this surprise rate cut. So we've got a trend line here, nice trend line on the hourlies as well, on Kiwi against the dollar. And if I just get up around 60.43. Now, just diving into the Kiwi crosses, right, just to see if there's any diamonds in the rough. There are a couple of sort of okay setups here, right? So Euro Kiwi, if they cut rates, well, you know what? Euro Kiwi is going to bounce, as is Sterling Kiwi. Now, I don't think if they're on hold, yeah, sure, a small part of the market will have to buy, but it's not like significant like we would see if they cut rates. Now, once again, I mentioned this yesterday on the on sterling and sterling yen with regards to the UK data. We've got UK inflation numbers coming up today. But that aside, Kiwi, if they do a surprise rate cut, it does eat into the carry trade, right? Kiwi or New Zealand has got the highest interest rates, 5.5% in the developed world. That will take some of the edge off the carry trade and should see Kiwi yen to the downside. I really like the setup there. And if anything, when you are looking at the setup, right, it's I'd be looking at the bottom of the cloud. Now, this is one of the key things. Why would I sort of leave it so far? Primarily because the Kiwi has limited liquidity, right? So when I'm looking around the various instruments, I'm looking for opportunities here. We could look for where's a good move here or a good trading opportunity based off weaker, like a cut, a surprise cut. Now, of course, as I just said, sterling, Euro Kiwi, sterling Kiwi go up. Kiwi Swiss. Well, this is not a bad pair, right? The Swiss being largely neutral, it would look for a very nice setup to the downside on Kiwi Swiss. So Kiwi Yen, Kiwi Swiss, most definitely. I'll probably leave the others alone at this stage. So funnily enough, the safe havens, which are largely neutral, look to be the best on the hourlies. And if I just come across to the daily charts, okay, you can see we've got some very similar patterns here. And I like this because it sort of builds confidence in the opportunity. Euro Kiwi pop top side, came back down. Once again, if they do cut on a daily perspective, it looks really good for a move up. Same on sterling Kiwi, right? And then also Kiwi Swiss. Well, it's already broken down, so it's another easy move to the downside. The hourlies on the Kiwi Swiss give us a better entry than Euro Kiwi and sterling Kiwi. Now, Kiwi CAD mid-range, nothing really to look at there. And we know Kiwi Yen on the dailies has already broken down, ready for a potential another leg to the downside. Now, and Aussie Kiwi, well, you know what? It's not doing too much. I mean, Kiwi, up to 111 where resistance is. It's probably too far away to get involved if they do cut rates. So what you've got to do is, in this situation, is look for the best sort of setup, right? And one that makes complete sense. I like the idea of Kiwi against the dollar. It's probably got the most liquidity out of all the Kiwi pairs, but definitely Kiwi yen, right? Kiwi yen, Kiwi Swiss. These two pairs, if we do get a surprise rate cut, should be a go-to, and there should be some cash on the table. Now, where do you get in? I'd be looking to get in on a surprise rate cut. You're looking at least 20 or 30 points away from the market, right? Or that's how far you should hit, right? If you're trading live, try and get into the trade no more than 30 points. If it moves very quickly, which it will do, right, you want to make sure you avoid the initial volatility. We may see, once again, with a surprise rate cut, a significant dive to the downside. It may jump down like 80 or 100 points. So what you would be doing at that point, don't chase it. Look for a retracement. And on that first retracement, look to get in and get into the trade there, right? So once again, out of all the major currency pairs, Kiwi has got the worst liquidity, and that makes the opportunity a little bit dicier. With that, because there's greater risk, just reduce your trade size. Look to get into the trade. If you're using a pending order, for example, make sure the order's small. And I would put that order sort of 20 or 30 points below the market. That gets you in to sort of cover the initial volatility, hopefully, and then look to get into the trade once that comes out, right? So this is a surprise rate cut. Just looking at the mismatch once again between what the derivatives market is factored in and what the market is expecting, right? It's one of those left field events. So prepare for it, and that's where the cash could come from. Like a no change, as I was just saying, okay, well, 22%, that's on the derivative side. But I can tell you the general market is looking at no change, and it sort of goes along with what the RBNZ is saying, but we're having a crack and seeing what see if the derivatives market lines up with expectations. Now, if there's no change of rates, just cancel the orders, no harm done. But you know what? You're preparing yourself for a cracking chance, and that's what we want to see. Good luck and happy trading.